Hello Jaguars, this is Fahad. I'm back. So today I want to take a look at NetSuite, symbol N. N is in Nancy. NetSuite. Here's a daily chart in front of you, and as you can tell, this stock has had a lot of rough waters. It has gone through some very choppy action over the last 2 years. So here's a daily chart, and if you go back to the weekly, you can see just too much chop fest, up and down, up and down. And if you go back further, make it a 5-year weekly, then you can see it had a fantastic run going back to 2011 after the IPO. It's a stellar run that went on for a couple of years, and then it just went into major multiple contraction or valuation contraction that continued to hammer the stock. Similar to over here when it was beaten down big time after the start of the year, which was back in 2014, the stock rebounded sharply and came all the way back to challenge the previous 52-week high. This was back in 2014, and now we're sort of playing out in the same way in 2014 as 2014 was, where we got hammered at the beginning of the year, and now we have come all the way back. Now, we're going to look at this in the same exact way as we look at every single thing, because that's how we like to do things at Jaguar Analytics. We're going to look at it in the three ways, using the same three-prong approach: the technicals, the option activity, and the fundamentals. So first, from the technical side, what I'm looking for on this daily chart is we have a beautiful, steady uptrend. Okay, and the volume has been very, very good behind this, starting after earnings. So we have this beautiful uptrend that's continuing to play out, and we had earnings that came out, the stock popped big time on high volume, and then it gradually moved lower on lower volume, and now it's been consolidating, and very recently in the last couple of days it has started to move out a little bit again. What I'm looking for with the stock trading right now is 79.31. And the resistance, look at this. This is your volume over price resistance. The resistance is at 79.80 or 79.60, I should say. So what I'm looking for is a breakout. Let's just take the round figure through $80 per share, and I'm looking for a move up to $85 a share. So you have $5 of upside over here from 80 to 85, round figure. So that's exactly 5% to the upside. On the downside, we're going to put a hard stop at right here, which was the last week's low, which was retested 3 different times and before it bounced. So that level is precisely $76 a share. So basically, with the stock at 79.31 on Tuesday, May 31st, after market close, we're looking to get long and looking for a breakout from 80, and a target is 85. That's 5% to the upside, and we're going to put a stop loss at last week's low, which is 75. Let's call it $76 even. Okay, $76 even. So that's the play on the technical side. Now, on the option activity side, I want to show you something very unusual that has been taking place right here. This is the kind of activity that not too many people will be able to flag this, because it's a small, it happens over time, over multiple days and multiple weeks. It happens consistently on the offer side. It has a way of skewing the implied volatility into an inverted skew, and it has the impact of high dollar wagers on the bid and ask spreads, on wide bid and ask spreads on the offer side. Just the action that just consistently builds gradually over time without getting flagged. It's the kind of action that you're not gonna find in NetSuite. Somebody came in and bought 5,000 block or 10,000 block order, and suddenly it pops up, and everybody on Twitter sphere get excited about this. This is the kind of action that gets my attention, because this is the kind of action that builds gradually over time, and just you see the open interest start to rise, and after a while, while nobody's paying attention, you realize that some things, people have accumulated, or smart traders have accumulated over millions of dollars worth of calls, and who knows why. And then suddenly news comes out and the stock pops. That's what I'm hoping is going to be the case over here. So first, what I'm seeing in the option market is, take a look at what's happening in June. First, just to show you the comparison on the put side, if you go to the put side, you'll see barely any open interest here in the option chain in June, July, June, July, October, and January. Just, this is just a little bit on June 80 strike puts. Otherwise, there's barely any open interest here. I mean, this is the only strike that has more than a little over 1,000 open interests. But you look at on the call side, and the open interest is drastically higher. In June, you got June 80 calls, June 2,400 open interest, June 85 calls, 5,000 open interest, June 90 calls, 3,000 open interest. July, 1,700 open interest at the 80 strike calls, and July 90 strike calls with 2,500 open interest. Most importantly, this open interest has been gradually building consistently, and today, all day, they were buying call options on this as well. You see this volume? This is what I'm talking about. 200 contracts, 400 contracts, 300 contracts, 200 contracts, going all the way out to June 95 strike with the stock trading just a little under $80 a share. I mean, these calls expire in 17 days, so I'm not sure exactly what's cooking here, but I'm going to try to bring some of the fundamental views that may give us some color later on. Same thing with July. They have been gradually building a position right here in July 80 calls as well as all the way out to July 90 calls. So these are good 10 to 20% out of money calls over the next 2 days that they've been building. All right, to give you another way of taking a look at this, if I go over here, anywhere, this is the June 80 calls. If I click anywhere on this, right click anywhere on this line, then go here, go to more info, and then go to TOS charts, and then click here, and it'll bring up this chart. You maximize the first sale. Let me just clear up the theoretical price section. You don't need to see that right here. See this blue line right here? This is the open interest. This all started on April 25th, and they've been gradually building and building. More buyers on May 10, May 11, May 13, big buyers on May 16, gradually building the open interest. It's been rising steadily since April 25th. That was on June 80 strike calls. Now let's go to June 85 strike calls. Same exercise over here. Go here, and let's pull up this chart. And once again, let me get rid of this theoretical price section. It's not necessary. See this blue line? Right here, same exact same picture. All started around April 20th. Gradually building non-stop. You can chart the same way the June 90 calls. You can chart the same way July 80 calls. You can chart the same way July 90 calls. All of these have been gradually building since late April. So basically for the past 4 weeks. And before that, there was barely any activity in this option market in NetSuite at all. To show you another chart that I brought with me, just to kind of give you on what I'm looking at, here is a chart. Let me make this bigger. So this one comes from LiveVol. So here's your daily chart, right? These are your moving averages. Here's your daily chart, and see how it has come back all the way. This chart, this is a 6-month chart. Okay, right here, this is a 6-month chart. This area that I've highlighted, that I put at the bottom right here, is what you will see very closely on the 6-month chart. There's no activity. These red bars are your put options, and these green bars are your call options. I mean, this was 3 months. I pulled up 6 months, but I could have looked at 1 year, 2 years, 5 years. You would never see this kind of unusual option activity in this stock in the past. But something happened after April 15. And you're seeing consistent, small, steady accumulation on above average volume call buying. Small, steady accumulation in upside call buying consistently since April 15. Almost every day. All these green bars right here. Green bars, green bars. Today again. Non-stop call accumulation, and they're targeting the June and July. They're not targeting any months outside of that. They're targeting June and July, which makes it even more perplexing. All right. So to show you another way of looking at it, the net impact of this is all of this. Watch closely. This is your implied volatility right here. So in the month of June, notice what happens. You have 41% implied volatility at the June 80 strike. It jumps to 42, almost 43%, and 49% at the 90 strike, then 52, then 57. So notice how it's steadily increasing on every strike that's further and further out of money. That's what calls implied volatility skew. Excuse me. That's how you form an implied volatility skew, which is a bullish implied volatility skew, where as farther you go out in the option, farther out of money you go out in the option strikes, you see the implied volatility go higher and higher. And that generally means that the farther the out of money calls are in higher demand than the in the money calls. And that usually only happens when the risk of particular event taking place. Maybe some catalyst, maybe some product announcement, maybe some earnings, FDA announcement, or just an M&A. Maybe it's an M&A target. Okay? Same thing you'll see in July. It's 39%, 40, 42, 44, 45. This is all forming a nice bullish inverted skew, implied volatility skew. And that's all because of net impact of that, net result of this is all due to all this consistent small steady accumulation in calls. Okay? But if you go out to October, you're not going to see the same type of implied volatility skew here. It's 40%, 40%, then it drops 37, 39, 36. You're not seeing the same pattern here. So then you go out to January 17, same thing. You're not seeing that. That's because these calls are not in demand. Look at the open interest. Okay, the open interest is barely anything. So these calls in October and January 17 are not in demand. It's the June and the July that are in demand, where the open interest continues to rise along with bullish inverted implied volatility skew. Okay, so this is pretty interesting. Why? Let me tell you why. If you look at the chart, here is NetSuite. Okay, earnings came out right here on April 28th. So earnings are already out of the way. And yet these call buyers continue to come in steadily. So earnings are already out of the way, and yet we have a bullish implied volatility skew forming. Usually implied volatility skew forms before earnings come out, because that is a hard catalyst. Earnings is a hard catalyst, and it's an event that's in play, and people would like to be positioned for that. So usually if the expectations are very high for very good earnings, you will see implied volatility skew start to form before earnings. It usually happens before a hard catalyst. This time we don't have a hard catalyst. Yet we have similar kind of IV skew forming with a chart that's consolidating and now starting to take out and break out again, and I'm looking for a leg higher up to 85. So we got the technicals, we got some very unusual call accumulation over here, and now let's take a look at the fundamentals. Now, here's something interesting. Here is my note. Here's my note from May 16. Now, if you remember, it was May 16 was the very first day when I started at Jaguar Analytics. After I left Option Monster, I took a break, and then finally, when I came over to Jaguar Analytics, it was that May 16. It was the very first day. And this is my note from the chat room. So May 16 is, right here. May 16, the Monday, May 16. And so this was one of the first very few stocks that I discussed in my chat room at that day on Monday, May 16. It caught my attention, and I discussed this right here. This is the same stuff that I mentioned back then. The type of call action that wouldn't cross many traders' radar. On average day, it trades 482 contracts, trading 3.4 times daily average call volume today, with buyers active in June 75, 80, as well as July 80 calls. And then I just talk about all of this. And here's the quick earnings that came out on April 28th. Fantastic quarter on everything. Earnings per share, 11 cents versus 3 cents estimate. That's a big beat. That's more like four times or three times the analyst expectations. Revenues, $216 million versus $213 million estimate. Great, beat. Billings, $227 million versus $220 million. Fantastic. This is what I like to see. Billings growth accelerated to 31% year-over-year growth versus 28% in the prior quarter. Operating margins expanded 4.7% versus 2.8% expansion we saw in the prior quarter. And the last read, the free cash flow expanded to $31.3 million versus $22.3 million estimate. Every single metric that the company talks about beat the consensus view, beat the consensus and sequentially and year over year improved. Most importantly, the guidance was bumped higher for the entire fiscal year between 1 and 3% on various metrics, and probably the most important line is right here. A record number of deals worth more than 500,000 to a million were signed in Q1. A record number, okay? Now, there was a very hard catalyst that was coming into play after the earnings came out. Okay, so these earnings right here, they came out on April 28th. And then in San Jose, between May 16 and 19, remember my note was on May 16, so that week, May 16 and 19, that's 2 weeks ago, the company made a presentation. The company held its Suite World Annual User Event in San Jose. So let's see what came out of that. So if I, sorry about that. Here is a note from RBC Capital. Now I want to show you that this is from May 17. This is their takeaways after attending that NetSuite event, where a whole bunch of new product announcements were announced from May 16 to May 19. Now, first of all, I mean, there was such a long list of product enhancement that were announced in this one that it was just remarkable. The problem, however, that I have is putting together in a clear format exactly what it means in terms of revenue growth, in terms of EPS growth, because there are small little enhancements and features added to the existing ERP platform that continues to expand into all kinds of markets. So it's all good news. It's great. So many good news and great products. It's very hard to see how much does that move the needle. So we're going to look at the consensus view at the end of this. But the first most important thing is this. There were at least 5 very large customers that came on the stand that basically laid out their own bull case. They were keynote speakers. These are top 5 customers. Their customer wins actually. By NetSuite that came out and presented what they thought about the company and why they actually went with it. That includes Hyperloop, Snapchat, Jackery, Aspect Software, some of the big ones. American Express was the one that came out last year. This year they had 4. So 1 versus 4 year over year. The company talked about the NetSuite Global Ventures. This company, by the way, NetSuite has been on a very, very aggressive M&A acquisition spree. It just keeps going out and keep buying small companies nonstop. Retail Anywhere was an acquisition that was announced to address the omni-channel, which is the retail e-commerce platform that combines the physical and the e-commerce together, bridge the gaps between the two together in hopes of streamlining the retail environment. So all these retailers that are struggling against Amazon can compete better. Okay, so omni-channel, you will see that name pop up in many places when you read about it. Omni-channel. All right, Macy's is going through a major development phase. Williams-Sonoma has become a huge customer of NetSuite because of the same thing. So it's the product that NetSuite is offering called Retail Anywhere is that product that is now targeting all of those omni-channels that all these brick and mortar retail stores are implementing, okay, to bridge the gap with their e-commerce partners. And so that's where NetSuite is making a big thing. iQuity was another major acquisition that was announced 2 years ago. iQuity, by the way, is now actually supposed to be targeting the same vertical where Workday, which announced earnings today, is now targeting. So that's another one. Then there is Suite Commerce that basically announced a whole bunch of new features and added to that. That's targeting the same space where is Demandware currently the leader. So they're going after them as well. This is NetSuite's version of controlling inventory and the order centricity. It's another one that attacks the retail channel. You can read all about it. I'm skipping a lot of the details over here. So many enhancements announced in the One World 16. This was one of the most talked about features that was in the conference. risk, compliance, governance, electronic invoicing, financial reporting, which once again, by the way, goes into the same area where Workday is currently the leader, and they're trying to grab the market share from them. And the last one was suite billing. Okay, so this one was another one where, let's say, if you are simply, by the way, this goes back to my old days too, when I used to be auditor in Deloitte and too. So this is their new, absolute new product with absolutely no competition in this at all. So they're going to own this market completely. What they're trying to do over here with this new launch suite billing is basically they're unifying the billing and the revenue recognition process. Now, I don't want to get you lost on this, but you know, a billing takes place at a particular time in a company, but the actual revenue of the companies are recorded in the books for accounting purposes supposed to be recorded at exactly the same time. To streamline the two processes that are completely different into one and make it work seamlessly and electronically is one of the steps that has been implemented that companies have always tried to implement, but it's a very manual process, and looks like the NetSuite is going to be addressing that with this absolutely new feature called Suite Billing, and they're going to own this market. By the way, about the revenue recognition, just to add something over here, NetSuite is going to also have a first mover's advantage with this new software that's being rolled out, because FAS, which is, you know, Financial Accounting Standards Board, FASB, I should say, Financial Accounting Standards Board, which is governed by SEC. Once again, they're rolling out new accounting regulations that will kick in late 2017, which will drastically change how the revenue recognition is basically conducted accounting-wise across the entire country. It will affect small businesses, mid businesses, and large business. It will affect everybody. And so that's going to actually require the billing and the subscription and the revenue recognition takes place simultaneously. Nobody is addressing this market. NetSuite will be the first one to address this market. And so 2 years ahead of that, they're already launching this. So they're going to have the first mover's advantage. So whole bunch of new products. I total counted, there are a fun bunch of other websites and research notes I have on this too, but I counted a total of 14 new products. 14 new products and enhancements that were announced. However, the problem is, and I'll be very honest with you, I do not know how it moves the needle. I've not been able to find a good way of figuring out how does all of that affect future revenue growth for the company. Is that going to really take it higher? Is it going to be significantly higher? What I can tell you is the sentiment, okay? You want to know something funny? Bank of America has an underperform rating on this stock. I mean, they just reported a blowout quarter. The revenue growth re-accelerated from 28 to 31% year over year. They beat on every single metric. They raised the guidance. And they just announced 14 new products on May 16 at their annual conference. And Bank of America has an underperform rating. Want to see something more funny? Goldman Sachs, 2 weeks after the earnings came out, slapped the stock with a sell rating. So here's another top tier one analyst, Goldman Sachs. They came out and they slapped the stock with a sell rating and a $69 price target. So the street thinks that the street just absolutely hates the stock, and I don't know why. Okay, and here's another one I'm going to show you. This one comes from Credit Suisse, real quick. This is your this is simply just a valuation metrics over here. So here's the stock when it went public. And it basically came public at 10 times enterprise value. The enterprise value over revenues multiple at the time was 10 times. It expanded drastically to all the way to 16, and then it came crashing down. With the stock currently at $80 per share, the forward multiple enterprise value over revenue is actually at the lowest level, near the lowest level in the last 5 years. It's only at 6 times sales. That's it, 6 times sales. And that is way below the average that we have seen of 10.8, and it's way below the standard deviation of 8.1, which is mostly the case for all the SaaS peer, SA, software as a service provider. Okay, so it's way below that. Lastly, the one thing I will tell you is right here. This is the chart that I will always like to come back to. Here's your earnings. It ticked higher slightly after Q1. That's good. But then after they just reported a blowout quarter, it ticked higher. They just beat earnings estimates by 11 cents, or by 8 cents, and yet the forward earnings multiple or forward earnings for fiscal years 2016 and 2017 have barely moved, only by a few cents. That once again tells me that there's a disconnect in the story. It's not appreciated in the market as much, and the fact that Goldman Sachs and Bank of America, both of them have underperformed and sell rating on the stock, also tells you that nobody's expecting anything good over here. The last thing I will say about this stock is that keep in mind one thing. Larry Ellison of Oracle, okay, this is very important. Larry Ellison of Oracle was the original seed in the company. He was the original venture capitalist in the company, NetSuite, when it was formed way back in 2007 and when the IPO came to the market. As of, and I was not able to find the most recent figures. As of March 2014, so we're talking 2 years ago, Larry Ellison is still owned 48.1% of NetSuite. He's the largest shareholder out there. At the time of the IPO, way back in 2007, he owned about 70% of the company, so he has diluted his stake a little bit since then, but he was one of the original ones that gave the seed money that when the company was formed many years ago, and he has always been one of the basically the largest shareholder. Until 2 years ago, he had a stake of 48.1%. That's Larry Ellison of Oracle. I don't know exactly what his stake is today. I was trying to look for that info, but I could not find it very easily. So, is this an M&A target? Is that why they're buying all these calls right here in June and July? Is Larry Ellison going to make a move? It's $6.4 billion market cap. It's totally and easily doable. Valuation has contracted to only 6 times revenues. It's not expensive. All right. It's coming out from a blowout quarter. It has 14 products that just rolled out that's going to be attacking into so many different SaaS markets, from HR, from human capital to the financial vertical, to the billing cycles vertical, to the revenue recognition vertical. There's so many different verticals that are going after at the same time, and it's one of the biggest players and one of the cleanest high growth stories in the enterprise resource planning, ERP, which is Oracle area. So, and Larry Ellison already owns 48% of the company. So yeah, it could easily be an M&A target. I would love to see that. So let's tie this up. So how am I going to trade this? The easiest, the simplest trade over here. Keep it simple. June is too close. I don't want to go with June. So I want to go to July. And I'm going to buy July 80, 90 call spread. After the market closed on Tuesday, today, which was May 31st, the July 80 calls were going for 4 to 430, and the 90 strike calls were going for 125 to 155. So if you buy this for, let's say, $4.25 and sell this for $1.25, you should have absolutely no problem, getting it for $3 or less. That's July 80, 90 call spread for $3 or less. In fact, given those slightly bid and ask spreads, you might be able to actually get it for $2.70 to $2.80 to $2.70 to $2.80 for the July 80-90 call spread. That's the trade I like. I want to own it. I want to put a hard stop right here at $76 a share, and I'm going to target $85 a share over next. How many days is that? Over next 45 days. That's it.